Baker Real Estate 2014 Market Wrap. It's our first webinar of the year. We host quarterly webinars, so after we're done this, we'll be shortly sending out details about our next webinar. We're very excited to have you all here, and we have a great turnout and a great online turnout. So I just want to cover a couple of things, housekeeping things, before we get rolling. We are recording this webinar today, so you will be getting an email from us where you can download the webinar with just the slides and the webinar with the actual voice recording as well to put the slides in context. And also, as always, we offer for our brokers and for our agents if you're interested, Baker's always happy to come out and run similar presentations for either your brokerage or your clients. And you just need to reach out and let us know. We're glad to come to your offices and do that. Joining us today is myself, Jeff Clark, and our CEO and President, Barbara Lawlor, who I know you all know. And today's agenda that we're going to cover, and we know that everybody's busy, so we're going to cover a lot in a very short period of time. The agenda today that we're going to cover is an overview of the population growth trends in the GTA and the Greater Golden Horseshoe. And we're also then going to cover the 2014 market wrap and some insight into the rental market and rental buildings being built in the Toronto market. And Barbara Lawlor is going to cover that. And then I'm going to go through our Baker web app. And I know you'll all be very interested to know about that and our upcoming projects. And finally, we'll open it up for a question and answers forum. So when we talk about the Greater Golden Horseshoe and the population, it's staggering to think that 26% of Canada's population resides in the Greater Golden Horseshoe. It is an amazing number, and it continues to grow. To put it into perspective, that's a quarter of all Canadians live within that horseshoe. That is a huge number. And Barbara is going to be talking about the trends in the housing market that have gone alongside with this population growth. The population is anticipated to grow by 2.4 million people over the next couple of decades, and this is driven by strong immigration numbers, which is also in place with some legislation that was passed in 2006 called the Places to Grow legislation. And if you look at the slide that we're looking at right now, you'll see a black curved line. And basically that is the outer boundary that developers are able to acquire new land to build either low-rise or high-rise condos. What this Places to Grow legislation has caused is the intensification of the population in the Greater Golden Horseshoe and specifically in the Greater Toronto area. And the end result of it is that we are growing up and we are not growing out. This has had a tremendous impact on the types of homes being delivered and the housing starts and completions. And so with that, what I'm going to do is I'm going to pass it over to Barbara Lawlor, who's going to talk about the amazing 2014 results that we've had in the GTA. Barbara?
Thank you, Jeff. Good morning, everyone, and welcome to all our Baker Realty partners. Thank you so much for joining us this morning. 2015 is not just a continuation of 2014. It is a new year full of possibilities and opportunities for those of us who sell real estate. But it does come hot on the heels of a stellar 2014. And we are looking forward to another great year in the Greater Toronto Area's new condominium market. According to RealNet Canada, high-rise sales in 2014 totaled 21,991 units, over 6,000 or 38% more than in 2013. In fact, 2014 was our third strongest year ever for condo sales in the GTA, and it was only a few less than the total from our second strongest year. All home buyers in the GTA today are fortunate to be taking advantage of historically low mortgage interest rates, which are likely not to increase this year, even if rates increase in the U.S. In fact, Benjamin Tull, the Deputy Chief Economist at CIBC World Markets Inc., said that interest rates here in Canada may even go lower. Adding to the sweet deal today's buyers receive are the low oil prices. Canada ranks #1 in energy consumption per capita in the world, so the money we save on gas prices is substantial. And CIBC is already seeing customers taking their savings and paying down the principal on their mortgage debt. And these savings will certainly give our investors more purchasing power for our condominium market. And I think it's a good thing that CIBC is already seeing that our investors are making mature decisions to pay down their debt load, because we hear a lot of that in the media. Strong market increase in new home sales. Take a look. The blue at the bottom of your screen is representative of our condominium sales in 2014. And if you look at the broken black dotted line, which is the 20,000 unit mark, you can see that rarely in the last decade did we achieve sales higher than 20,000. But 2011 is clearly still the front runner. But 2007, which is the second strongest year, and 2014 are very, very closely aligned. And that shows us a great result of 38% greater than 2013. It's very heartening and gratifying for those of us who focus our energies on selling new construction condominiums to see that our share of the market continues to rise. And this has become momentum that we gathered when I started selling condominiums in 1987, we took 5% of the market. And only in recent years have we seen the condominium sales outpace low-rise sales. But I am so glad to show you this screen, because it shows us that high-rise, which does include loft and stacked townhomes, has in fact taken 55% of the market in 2014. And that puts low-rise in a 45%, so good for us. I think we also should address price. The fact that condominiums remain the new home choice of so many, it's understandable for a lot of reasons, but price is, of course, one of them. And the real net difference between the average low-rise and high-rise home is substantial. Low-rise is set at a record high of $705,813. 2014 was actually the first time the average topped 700,000, and high-rise is at an average of $454,476. This is a massive difference, especially for the first-time home buyers. The difference is $251,337, and that difference equates to 16%, which really, really supports the demand for our condominium products and the affordability of our condominium products remaining front and center. We hear a lot about there's too many condominiums in our marketplace, but this next graph will show you that we have in fact been selling down. The blue line is low-rise, the orange line is high-rise, and we are at remaining inventory of 20,234, which is really appropriate and very much along the average line of the past decade. And we, in fact, achieved a 9% sell down in 2014. So we're very much on the right track. I would like to also speak a little bit about rentals. Condominium investors continue to do well financially because, let's face it, the rental market is the condo market. Condo vacancy rates have dropped to 1.3%, so we really need more supply for that market. Jeff's comment about our population explosion that's about to take place in the next 20 years, they will need roofs over their heads, and they may not start with home ownership. Many of them will start with rentals. Some will rent, some will buy, but we have to be ready for that. And according to Build, we are, and that's the good news. This particular screenshot shows you the difference between the purpose-built rental starts versus condominium apartments, and there is no competition there. Blue being the purpose-built rental apartments, and the red lines being our condominium apartments. We've set a record of 25,571 new homes built as a result of the sales we experienced in 2010 and 2011. And this is really promising news for our tremendous population growth, and we need to keep this momentum going. Our next slide just shows the average vacancy rate, which is blue being condo and red being purpose-built, and you can see that we need more condominiums built to keep up with the demand. We're at a low of 1.3%. And here's an interesting slide. Higher condo rents are doing very little to deter the renters, and this is a very interesting slide because on the left-hand side of your screen, it shows 2013 on the purpose-built rental versus 2014 in red. And then if you look at the right-hand side of your screen, it shows condominiums. And on the very left-hand side, it shows actual rental rates. And you can see that condos are far outpacing purpose-built rental rates. But it's very interesting to me that the millennials, who are the consumers between the ages of 20 and 34, are choosing condominium living for more than affordability. They are incredibly busy and appreciate the kind of carefree living condominiums offer. Millennials are clearly willing to pay more to live in new buildings that feature the latest in materials, construction quality, and green features. They can exercise, socialize, relax, barbecue, and entertain in the gorgeous amenities within their buildings and not have to worry about wasting time driving or taking transit somewhere to do that and parking their vehicles. So that is very interesting to me. Speaking of that, the building and development industry creates about 200,000 jobs in construction and a variety of related fields every year. When you think about each of those job holders going out and spending their wages on accommodations, food, entertainment, education, and the like, this really represents a big economic impact across the GTA and our province. So we are privileged to have many of the world's finest builders, developers, architects, and interior designers working on our condominiums. And our skyline and quality of life are all the better for their great efforts. So in short, all the fundamentals are in place for continued success. Prices for new homes and condominiums will likely go up this year, but we're not expecting them to spike. And if you've ever thought, or you have clients who have ever thought of buying a condominium, well, now is the time to do it. And in closing, I want to show you a graph that I think is really important. And it is measuring new condominium average dollar per square foot versus the TSX. The bottom of the screen shows we are tracking from 2007 to 2015. Condominiums are red and the TSX is in blue. And one glance at this graph and you can see the volatility of the TSX and the beautiful incline that is steady and encouraging in our new condominium average dollar per square foot. So I am thrilled to see that and very excited about our future. So at this point, I'm going to hand the mic back to Jeff Clark.
Thank you, Barbara. That graph showing the TSX against the price per square foot comparison is really shows the lack of extreme volatility that you get in the housing market relative to the TSX. So I'm happy now to be able to talk to you about a few things that we have going on at Baker. First, I'm going to talk about our Baker web app, and then I'm going to go over and start talking about the projects that we have coming up that I know that you'll all want to be involved in. First of all, we have invested significantly in a new Baker web app. You can see on the slide in front of you that you just simply have to go to mybaker.bakerrealtypartners.com and you will be able to log in. It is password protected, and it is a broker/agent only site. If you haven't logged in before, you'll log in with your email address and then you'll add your RICO number. After you've logged in for the first time, you can then go ahead and create your own password for our Baker web app. The Baker web app isn't a replacement of our website. It's a totally different functionality. It does not have all of our projects on right now. What we've been doing is adding new projects as we come along. So some of the projects that I'm going to talk to you about that are coming up shortly or in the near term will be added to the web app as well. The web app actually has two sort of faces to it. The first face is a client-forward face to it, which is your ability to show the projects to your client in the convenience of their living room or at a Tim Hortons or at a Starbucks, and you'll be able to walk them through all of the renderings, all of the information, the lifestyle, the floor plans, the brochure. You'll be able to show that to your clients at their convenience. The other face of it is a broker or an agent face, which contains all of the price lists. It also contains information about your commission, how that is payable. It also allows you to take these great images and to download them and be able to then create your own marketing slicks, or you'll be able to create your own websites with this information as well. I've specifically circled, if you'll notice under the colors of Emerald City, I've circled the black box there which says create a worksheet. So one of the exciting things about our Baker web app is the ability now for you to be able to complete a worksheet online, wherever you are, on whatever platform you are using, be it an iPhone, a Samsung. It doesn't matter what platform you're on, you'll be able to go into the Baker web app, show your clients the project, and create a worksheet. It's a very straightforward worksheet. You'll see there we have a screenshot. It is basically 5 steps, and the information we collect is exactly what you would be filling out on a paper worksheet. We're happy to announce that in addition to being able to create this online worksheet, we are now adding a functionality that once you've created it, it will populate in a PDF format a typical worksheet that you're used to seeing, which you'll then be able to print off and bring to the sales office or keep for your own records in a format that you're familiar with as well. There's another part of the web app that is broker facing or non-client facing that we are adding as well, and that will be your portfolio management, so that you'll be able to track the number of units you have in play with Baker sites, where your mortgage approvals are, post-dated checks, if it's firm, if it's still in condition, and then ultimately we'll be adding other functionality such as being able to go in and download your broker referral forms and documents such as that. We've also put up on the screen we've got an iPhone and a Samsung tablet there. There's a very easy step that we'll be adding to our web app that you'll be able to understand very easily how to get our Baker logo onto your home screen, so that you'll be able to just click with your thumb and off will come our Baker web app, so you won't have to log in all of the time. It'll be right there at your fingertips. So that is a functionality that we're adding to our Baker web app as well to help you so that it's at your fingertips. So now we're excited to tell you about what we have coming up. So I know in many cases we've been out talking to some of you about some of these projects, but currently we have on the horizon, and in the near term, the very near term, we have Park Avenue Place Phase 2, Riverside Square Phase 2. We have the Colors of Emerald City. We've got the Rosedale on Bloor coming very soon. And 95 Berkeley, which is actually, you'll be the first to hear the name. The name of 95 Berkeley now is officially East United Condos. Then we have Nautique, Gem Condos, the Yorkdale 2, 250 Lawrence Avenue West, Canary Block 16 coming, 75 the Esplanade, and Ruby. And in La Belle Province in Montreal, we have Muse, the town of Mont-Royal, Bleury, Sherbrooke, and Lachine East. So we have a very, very busy plate in the first half of this year. I know that you'll all want to be part of these projects, and the way to become part of these projects is to get yourself registered into our Baker web app, because that will be where you'll start to get the early information and be able to download very early information, and more will be uploaded to it as we move along. So I'm just going to now open it up. We've had a number of questions being forwarded to us. So we're going to just take a couple of questions. We have one question, which seems to be a popular question out there these days, and that is there a trend towards two-bedroom units? And Barbara, I think I'll answer that. I think the answer to the question is there is a trend towards two-bedroom units, but I'm not seeing a trend towards greater than 1,000 square foot two-bedroom units. What we're seeing is packing in more programming in smaller spaces and creating two bedrooms where it used to be a one and den. We've had recent projects where we've seen two bedrooms packed into as small as 570 square feet, and a two bedroom, two bathrooms in as little as 620 square feet. So what the trend we're seeing is a maximization of the utilization of the space within the unit to give more programming. So you are seeing, yes, more two bedrooms, but we are not seeing a trend right now of two bedrooms going north of 800 to 900 square feet.
And certainly, too, Jeff, it speaks to affordability as well, because if the square footage is lower, then the end price is lower, and that is hugely important.
Absolutely. We also have another question here, and maybe I'll turn this one over to you, Barbara. Do you think there will be a continued trend or a trend in the stacked townhomes market?
The short answer is yes. They're a very popular product, and I think they answer a need for a part of our buying public who want ground-related housing. They can't get into the low-rise market or even the townhouse market. So the starting point for that type of ground-related product is stacked townhomes, which still gives you the feeling that you're living in a house, but you're actually living in a part of a low-rise structure. So I think there will be more demand. The difficulty is that the highest and best use of land is quite often vertical tower as opposed to a low-rise townhouse. But certainly there's great demand for it, and it is a highly affordable product. So I think we'll continue to see great interest in that.
Yes, I know many of our clients are exploring adding stacked towns to their portfolio of homes that they are looking to build. And it's exciting times. We've had some very big successes with stacked townhomes as well. And I know that we have a number of projects on the horizon where stacked towns will be part of the offering in addition to mid-rise to high-rise condominiums.
Mm-hmm.
We always have the question about how to get more information, and again, for our upcoming projects or for projects in general. And again, we urge you to get yourself logged into our Baker web app, and that will be a great delivery for all of the upcoming projects. And we're proud to be showcasing our new website coming soon. And when we get that ready, we'll be in touch with you as well. It will be an exciting new website that we have coming. So I think with that, what we're going to do is we're going to end the webinar, and we want to thank you all for joining. We've put up a slide here on how you can reach out and get in touch with us through our website, through our web app. We are very active on Twitter, as many of you know, and I'm proud to say that we're now very active in WeChat. And we have a very, very robust and very well followed blog that we encourage you to get on and log in and see what we all have to say about the market or projects or just the housing situation in general. So with that, I'm going to thank you all on behalf of Barbara and myself and the entire Baker team for a very successful kickoff to the new year with our 2014 Market Wrap. And again, if you'd like us all to come out and do some presentations at your offices or help you in client presentations, we are your partners in success. And so we are only too happy to do that. So with that, we are going to thank everyone and we are going to sign off.
Thank you. Have a great day.